All right, so it's time for a little market follow-up to my last video. And so as of right now, we are well into the close of the markets here in the Western Hemisphere. And of course, silver had that rally that I anticipated. And it looks like as of now, heading into the closing hours of the Crimex, it's starting to turn over just a little bit. But then again, we give it a couple hours. And when Asia opens up, you can expect it's going to take right back off. And so that's what I want to touch on. And before I move forward, as always, for those who are plugged in, definitely drop a comment down below. Hit that thumbs up button to show your support for the channel. And more importantly, drop a comment. Let me know what you're thinking. And also make sure you subscribe, hit that bell so you can plug in whenever I decide to put up a video. So looking forward to doing more connecting and sharing my insight as well as my intuition on what's happening out here in the markets. And importance, of course, to definitely, continue to get your weight up, as I like to say, and prepare for the days ahead because it's going to be very interesting. So without further ado, let's jump right into it. So on the screen here, so as you can see, here we are now, as I just mentioned, we're coming over. They're starting to put a little last minute futures contract dumping here in the Western Hemisphere. So we see that it's kind of turning over a little bit, but we got up to a peak of, looks like, above $64, if I'm not mistaken. And I'll actually zoom down and we'll take a look at it on a more timely manner. And so let me just get myself situated here. And let's just go back over the last hour. Let's go back 6 hours. So over the last 6 hours. So it looks like the new all-time high of today, the 11th day of the month of December 2025. Remember this day because it will be probably just phase one of many more phases to come as we look back. But $64.28 is the new all-time high for today. And as I mentioned last night, I anticipate tomorrow being another all-time new high type of time period just because of the East versus West. We got the bullion banks on the West trying to continue to suppress while Asia's looking to let this thing rip. And so we're definitely going to be having a lot more to talk about. But outside of the actual price action, I've noticed a lot of comments and commentary out here about what's happening. And beyond the actual price, considering and focusing on possession. And so I was actually listening to a couple of silver channels that have spoken with dealers. And the question was, at what point will dealers begin, I guess, either increasing their premiums to kind of protect themselves from the fact that they appear to be somewhat nervous, is that they're taking on inventory, i.e. people looking to unload a little bit of their silver, and the prices they're paying, given the continuous movement of the spot price every single day, is making it hard for them to determine their buy ask or their buy and ask price, because they're concerned with a drawdown of the markets. So say, for example, today, right now, is $63-ish. So if you went in to try to unload, just say 100 ounces. And so literally, if a dealer bought that from you at, say, more than likely, I'd assume it'll fluctuate depending on their inventory and things of that nature. But imagine if it's $63 an ounce today, you took it in trying to unload it, they gave you 60. And so that's $60 there. It basically is a lot of money on their end that they have to make sure that they are willing to let go of, or currency rather, they're willing to let go of, because tomorrow, if there was to be a slam down, say of the typical $6-7 that we saw weeks past, it goes from 63 now to 57 or something like that. They potentially have lost a little bit of their currency, where had they waited a day later, they could have got rid of that silver. They could have got that silver that they just purchased at a cheaper rate, meaning that if it went down overnight to 57, they sold it to you for, they bought it for 55. They could have saved themselves, literally, $5 an ounce, give or take. So it's these type of fluctuations, I think, is going to cause people to somewhat be reserved on the bullion side, and dealers are going to probably offer, a lot lower than they typically would, given the fact that, trying to tab a price, a steady price, those days may be done, because with every day new all-time highs heading into the end of 2025, it's good to say 2026 will probably be even wilder, because we're going to have, I believe, greater swings. So my whole point in that is, Continue to stack. There is no such thing as, waiting for a dip. I would not hold off waiting for a dip. If you have, in my opinion, if you have some available funds, you might want to take advantage of possession today and worry about the price next year. Look ahead, thinking if things unwind the way they are now, next year at the same exact time, if you were just to guesstimate, my assumption would be we're going to probably be double. So instead of 63, 64, just put it at, 120, 100-ish plus, barring something breaking. And so with that being the case, that then takes us into what I would want to focus on next, which happens to be the gold to silver ratio. And so I saw a comment. Someone said, is it a good time to, perhaps let go of a little silver in redemption of it for gold? And the simple answer is no, because in this short time frame of us experiencing new all-time highs, what appears to be daily, weekly, gold has had a much longer period of reaching all-time highs, say, half a year. Half of this year has been every incremental climb week by week for gold. As of right now, because there is no way of really having price discovery as to what an ounce of anything will be in a world where they just announced that they're going to start QE. Therefore, there's going to be accommodative policy coming. And speaking of policy coming, the primary reason it's coming is this right here. And, most people are not paying attention to this, but this is real. And so literally, as you see on the screen here, this is from, Quentin, somebody on X or something like that. But it says the U.S. needs to refinance $8 trillion of debt in 2026. So that means rate cuts, QE, and more money printing are coming. So as you can see, this red circle here, this is what's coming due this year. And as of now, it's over $8 trillion plus interest. And this is all a result of Janet Yellen under the Biden administration. On the way out, they decided to do a lot of borrowing on the short end. And so it says here, Janet Yellen's short-term thinking could cost the U.S. big. It says the Treasury Secretary debt decisions during the pandemic locked in low rates, but only for 2 years. Now taxpayers are paying the price. So this is from January of this year when they were looking out as to the time it's going to be, as into the time it's going to be for refinancing our debt. And then it goes on here to, what did Yellen fail to do? And then another thing was here, it was something like, what was she thinking? I was, let me see if I can find it. Okay, but I'll spare you on that. But point in case is, we got a lot of debt coming. And so this is a share of debt held by public by year of maturity. And so as you can see, the same graph from a different perspective, here we have a lot of front-loaded debt. And so literally the cost of financing U.S. government debt is going to be very burdensome. And so what does that mean? The Federal Reserve will step in and create more currency. Therefore, more currency is going to be created to fund these debt issues that the Treasury is going to literally just issue that much more short-term debt. And so the Fed is going to step in and buy it because the rest of the world is not going to be rushing to buy it. And as a result of all that, my whole point is, as a result of all that confusion, we're going to see gold and silver potentially accelerate faster than what we've witnessed now. So my whole point is, exchanging gold for silver, you want to stay, I would say, stay positioned and physical in your possession or somewhere nearby or whatever you got to do, and let this stuff sort through before you start trying to make some moves to recalibrate and recalculate and recategorize your holdings. Just realize what's happening is this is being destroyed. And so let's look at the gold to silver ratio. So on the screen here, as a result of this sudden silver movement, we've had the gold to silver ratio, as you can see here, just literally drop. So from today at 9:53 a.m. is where I'm at right here as I'm hovering above the screen, down to 1:43. So from 9 in the morning to almost 2 in the afternoon, we went from a 67 gold to silver ratio down to 66.59. Now, that's small. That's 1 point or so. But look how large this looks in its totality, you know what I'm saying? And then, of course, as a result of this silver turning over, as I just showed you a moment ago, we got silver from this high this morning and them managing to turn it over, meaning it coming down from 64 down to 63. This is what we're seeing here as the gold to silver ratio bounces back up towards 67. So like just these type of drops and dips. So the gold to silver ratio right now, even though it's coming down, let me just show you what it has been over the last year. And so literally we coming off of a midsummer high. It was at, let me get myself together. It was at 104 ounces of silver for 1 ounce of gold to where we are now at 67. So that close to 51-ish, 51 ounces of silver decrease that a person would have lost had they converted early rather than just going along for this dip, going along for this wave. Let gold and silver do what they must do. They're being pushed up because of a crunch of supply and a increasing demand, and it's all going to be put in one pot, and the debt refinancing is going to stir it to where they're going to cook up something so good that the price, we won't be able to really wrap our heads around it, in my opinion. And so with that being the case, that's why you want to stay calm, collective, just continue to add to whatever you can, wherever you can. Also look for other opportunities. There's all types of things that I'm also keeping my eyes on as well. But gold and silver will continue to go up because the debt load is coming. The world knows it. And so literally more people are going to catch wind of it. More institutions and more manufacturers that know that if they don't get silver now at 63, 64 for a year or two demands down the road, whether it's solar panels, electric vehicles, or something like that, it's going to cost them that much more, therefore putting that much more of a tight crunch on their operating budget. So you're more than likely better off front running that additional expenditures by getting as much silver as you can now. So that's going to create an institutional demand that may also push price of silver a lot higher, a lot faster. So these are things that's happening. Incremental highs every day moving forward, in my opinion, until something breaks. Then we get into 2026 when the debt situation becomes too much to handle, and the Federal Reserve announces that they're going to now have to increase the amount of Treasury or T-bills that they're taking on, not only to provide liquidity for the banks and the banking sector and keep the rates, all that stuff within in margin, but then also to help Uncle Sam with their extreme amount of treasuries that they're going to issue because of that debt load I just showed you. So this is how the end game unravels. But then again, you're aware, you're awake, stack heavy, enjoy the process. Other than that, I'll catch you guys later.